Let's look at some problems for Chapter 11. I have our screen here open to our ebook. I've got the computational exercises for Chapter 11 here. Chapter 11 is about partnership distributions. Basically, I think Chapter 10 was more about creating a partnership. This chapter is more about then what happens after it's been operating. As current partners take distributions out, that's part of it. Then what do we do when the partnership is liquidated or an individual partner liquidates, wants to get out, sells his or her interest, the partnership itself just ceases operations, terminates, and so on. So Chapter 10 was about formation. Chapter 11 is about then distributions and the end of a partnership. Okay, so with that in mind, take a look at question 10. We'll work through most of the computational exercises. Chapter 11, question 10. Let me say that right. So right here. So Franco owns 60% interest in Delera Inc. on December 31 of the current year. His basis is 128. Fair market value is 140. And then in a proportionate current distribution, the LLC distributes 30,000 cash and equipment with an adjusted basis of 5,000 and a fair market value of 8,000 to him on that date. How much is Franco's adjusted basis, and what is the amount of his basis in the equipment received? Okay, so this is a regular distribution. It says proportionate. That kind of matters also. So regular proportionate distribution. So to look at this then, Franco, his basis 128. He's receiving 30,000 of cash, and then equipment with the basis of 5, fair market value of 8. Okay, so let's go back to Excel. We'll just kind of work a few numbers here. And so his original basis is 128. That's his original basis. I'll just say B for basis. Then he receives cash of 30, so I'll go minus 30,000. And then just say C for cash. And then he receives from that equipment with a basis of 5. So right here, equipment with a basis of 5. Okay, I'll just do E for equipment. And we just sum that up, and his new basis is 93,000. So quite simply, his new basis is 93, which is what the question is. What's the amount of his basis in the equipment received? And what is his basis in the partnership? Okay, so his partnership basis is 93, and the basis in the equipment is just simply the 5,000 that was transferred over to him as a normal proportionate distribution. Question 11, Lola owns a 1/2 interest in Lennox LLC. Her basis in the ownership interest is 22,000 at the end of the year. After accounting for the calendar year LLC's current operations, on that date, they distribute 25,000 cash to Lola in a proportionate current distribution. What amount, if any, what is the amount of any gain or loss recognized as a result of the distribution? So what you have to recognize is a couple of things here. Her ownership interest is 22. She received an amount greater than that. So she received 25. So her basis is 22. She received 25. That means that she received the difference, $3,000, as a capital gain. So she would recognize a $3,000 capital gain. The other 22,000 is just simply a return on basis. So question 11, 3,000 recognized capital gain. Question 12, Pablo has a $63,000 basis in his partnership interest on May 9 of the current year. The partnership distributes to him in a proportionate current distribution cash of 25, cash basis receivables with an inside basis of 0 and fair market value of 16, and land with basis of fair market value to the partnership of 80,000. How much is Pablo's realized and recognized gain on the distribution? And then what is Pablo's basis on the receivables land partnership interest following the distribution? So we have to kind of go through and think through what he received. And let's just kind of list them out here. So his basis is 63. He received proportionate current distribution, cash of 25. receivables 0, but fair market value of 16, and then $80,000 fair market value of land. I'm sorry, 16,000 basis for the cash receivables, and then land with a basis and fair market value both of 80. Okay, so let's just go and list out some numbers here. Okay, so he starts out with what he receives here. He receives 25,000. That's cash. Say C for cash. He receives 16,000 of the receivables, and that's kind of what they call those hot assets. If you remember that from the chapter, I'll call it R for receivables, called a hot asset. That's why we use the fair market value and not the basis of 0. And then we go with the land, which has both a basis and a fair market value of 80. So we go with the basis here, but it's the same as the fair market value. That's L for land. Okay, so he essentially received those 3 items, and the sum of those is 121. Remember that his go back to the question. His basis is 63. Okay, so this is what he receives as the distribution. His basis is 63. So just the sum of the two then is, let's see, did not do that right. Let me do my math better. There we go. So $58,000 would be his, essentially his gain. Okay. So he received 129 on a basis of 63, so he received an overage of 58,000. Now the key though is, while he does have a gain of 58, the question is how much of the gain is recognized, realized and recognized. So he realizes a gain of 58,000, however he does not recognize it. And the reason he does not recognize it is because the cash distributed is less than Pablo's basis in the partnership interest before the distribution. So the cash of 25 is lower than his basis of 63. Therefore, he does not recognize the gain. Okay, he realizes the gain, does not recognize it on his tax return. Question B, going back to the question here, what is Pablo's basis in the receivables, land, or partnership interest? Okay, so coming back to that, his basis in the receivables is 0, the same as the partnership basis. Okay, because it was a hot asset, I include it in the calculation of the realized gain, but his basis is still 0. And then from there, what we have to do is recognize what his basis in the land is. And it says here the basis that was transferred to him was 80,000. However, it's not going to be the same way for Pablo. What we have to do is take the basis that is left over, the 63,000 that he had originally. We subtract the cash from that. So basically just take the 63,000 basis he had minus the cash received, and that leaves 38,000. And that's the basis that will be assigned to the land. Okay, so the basis to the land would be 38,000. Basically his basis minus the cash that's assigned to the land. So it's kind of a carryover basis. And essentially then his basis in the partnership is 0. Okay, so his 0 basis in the partnership, 38,000 basis in the land, 0 basis in the receivables. Okay, question 13 is Bruno. It says here that when Bruno's basis in his LLC interest is 150, he receives cash of 55, a proportionate share of inventory and land in a distribution that liquidates both the LLC and his entire LLC interest. So now we have a liquidating distribution. The inventory is a basis to the LLC of 45, fair market value of 48, land basis is 70, fair market value is 60. How much gain or loss does Bruno recognize? And what is his basis in inventory and land received in the distribution? Well, first of all, recognize that there is no gain or loss for Bruno to recognize. He's going to instead just simply receive some carryover basis in what was received. So he'd receive a carryover basis of 45,000 on the inventory. So his basis on the inventory is 45,000. And then we'll have to think about from there, though, what goes to the land. So remember that his basis was originally of 150, and he receives land or cash of 55. So we take the 150. Let's take his original basis over here. Let's do this one over here. Whoops, one more zero. 150. That's his basis. Okay. We're then going to subtract the cash. Okay. That comes out, and then we'll take out the inventory, the 45,000 basis for inventory. And then that's what's left over is 50,000. Okay, so that 50,000 that's left over, that gets substituted to his land. So basically the basis on inventory is 45. The basis on the land becomes the 50,000. Okay, so it's 45 and 50. Question 14, it says here that Magdalena's outside basis is 58. She receives a liquidating distribution of 15, cash, and a proportionate share of inventory, having a partnership basis of 20 and a fair market value of 24. The distribution results in liquidation of both the partnership and her interest. How much is Magdalena's basis in the inventory received? And what is the amount of any gain or loss recognized on liquidation? So she's going to receive the carryover basis. Again, that's kind of been the common theme so far. So the 20,000 right there. Let me see if I said that right. So the basis of inventory is a carryover basis of 20, which reduces her remaining basis in the partnership interest to 23,000. Basically the original 58,000. Okay, so basically her 58 basis minus the cash of 15 minus the 20,000 inventory basis. Okay, so that leaves 38,000. So 58 minus 15 minus 20. I'm sorry, it leaves 23,000. Let me just do that one in Excel because I said different numbers here. So her original basis of 58. That's her original basis. Minus the cash of 15, minus the inventory basis of 20. I can type in the right number. Okay, that leaves her with 23 left over. Okay, that's her basis is 23,000. Now remember, we're liquidating this. So the second part is, what is the amount of any gain or loss recognized on liquidation? So she can recognize that 23,000 leftover basis as a loss. Okay. She can recognize this capital loss because she received only cash, inventory, and account receivable, and her basis in those assets is less than her basis in the partnership interest before distribution. So it was 58, now it's 23. So she can recognize a $23,000 loss on the liquidation. Okay, question 15. Rice contributes non-depreciable property with an adjusted basis of 60 and a fair market value of 95 to the Montgomery Partnership in exchange for a 1/2 interest in profits and capital. In the next tax year, when the property's fair market value is 100, the partnership distributes the property to Jarvis, the other 1/2 partner. Jarvis's basis in the partnership interest was 100 immediately before the distribution. Which partner must recognize a gain, and what is the amount recognized, and what is the effect of that partner's basis in the partnership interest? What is the effect on Jarvis's basis in the non-depreciable property received? So lots of questions there based on what's going on. Okay, so Rice contributes non-depreciable property, adjusted basis of 60, fair market value 95. Okay, the next year when the property's fair market value is 100, the partnership distributes the property to Jarvis, the other 1/2 partner. Okay, So a little bit different in that Rice contributes it, and then a year later it gets contributed to the other partner. Now, when you go through the chapter, they mention there's a 7-year rule, and clearly this is within 1 year. So because Rice originally contributed the property, and because it was contributed to the partnership less than 7 years before distribution, so obviously just 1 year, Rice must recognize the $35,000 pre-contribution gain. Okay, so that's the difference between the 60 basis and the 95 fair market value, so $35,000. Rice increases his basis in the partnership interest by the 35 gain recognized. So the basis goes up in the partnership by the 35, and Rice has also a $35,000 recognized capital gain. Okay, so that's what's going on then. Now for Jarvis, increases his basis in the property by the same amount up to then the $95,000, which is the 60 plus the $35,000 gain. And then, so basically, then under the regular distribution rules, the property originally took care of a basis of 60 against Jarvis's $100,000 partnership interest. Okay, and then is increased by Rice's $35,000 gain. Okay, so essentially, then, so this kind of summarized then for Rice. Recognizes the $35,000 gain. Also, Rice's basis in the partnership goes up by 35. For Jarvis, increases his basis in the property by the same amount, to 95, 60 plus 35 to 95. Okay, so that's basically the answer. Question 16, 10 years ago, so obviously past 7 years, Dudley contributed land to the Prosperity LLC. His basis in the land was 100, and the fair market value at the contribution date was 115. This year, when the property's value was 200, the LLC distributed the property to partner Nikki. At the same time, Dudley's basis in his LLC interest was 50, and Nikki's basis was 60. Assume the partnership continues in existence and has no hot assets. What gain or loss is recognized as a result of the contribution of pre-contribution gain property? What is Dudley's basis on his partnership interest following distribution? What is Nikki's basis on the property received and her partnership interest following distribution? So the difference between 15 and 16, 15 was within 1 year. 16 is clearly more than 1 year, 10 years, and the IRS rule is a 7-year rule. So in this situation, no gain or loss is recognized on the distribution. Dudley's basis remains 50,000 down here, and Nikki's takes a substituted basis of the property of 60,000, and her basis in the partnership is reduced to 0. Okay, so after the distribution, essentially Dudley's basis in the partnership itself goes down to 0. And takes a basis of 60,000 on the property. Okay, so here's the rules. So that's what happens. So because Dudley contributed the property more than 7 years before the property was distributed to the other partner, therefore the pre-contribution gain distribution rules do not apply. And this is a normal proportionate current distribution, which means there's no gain. Dudley's basis in the partnership interest is not affected by the distribution to the partner, so Dudley still keeps that 50,000 basis. Nikki takes the $60,000 basis in the property, which is lesser of the $100,000 carryover basis in the property or her basis in the partnership interest before the distribution. So therefore, her basis now goes down to 0. Okay, so the difference between 15 and 16 is the timing. So that's the difference. But both of them were distributions of property to another partner, from one partner to the partnership, then to another partner. Question 17, Wiley recognizes a $10,000 capital loss and a $45,000, I'm sorry, let me say that better. Wiley receives cash of $145 in liquidating of his partnership interest, in which he has a basis of $110. So he receives cash of $145. The The partnership owns no hot assets and continues in existence. So we're just liquidating Wiley's interest. The partnership itself keeps on trucking along. After following all the classification requirements of Section 736, 100,000 of this amount is classified as property, and 45,000 is a guaranteed payment. As a result of the liquidation proceeds, how much will Wiley recognize as a capital gain or loss? How much is ordinary income? So hopefully you recognize that $45,000 guaranteed payment as that's ordinary income. Okay, so guaranteed payments become ordinary income to the partners who receive them. So that's very important to remember. We kind of talked about that in Chapter 10. So then after that, the basis was 110, okay, and then we classified that 100,000 as property. So we're going to compare the 110 to the 100, and we'll have a $10,000 capital loss. So essentially for Wiley, $10,000 capital loss, $45,000 ordinary income, which is the guaranteed payment. Okay, I'm skipping 18, so we'll go down to 19. For 19, this is for Sweeney. Sweeney originally contributed a $175,000 in cash for a 1/4 interest in the Gilbert LLC. During several years that Sweeney was a member of the LLC, his share of the LLC's income was $90. He withdrew $75,000 in cash. The LLC liabilities are $80, of which Sweeney's share is 1/4 of that, or $20. It had also $40,000 of hot assets. His share is 1/4 of that, which is $10. Sweeney sells his shares to Jana for $225 in cash, and Jana assumes Sweeney's share of the LLC's liabilities. How much is Sweeney's gain on the sale, and what is its character? How much is Jana's adjusted basis in her LLC interest? Okay, there's a lot going on with that one. So we're going to go over to Excel. So the original basis was 175. Okay, so let's go do that over here. So 175 basis. So we'll call it B for basis. Okay, and then we have to kind of make all the adjustments to that basis that have happened over the years. So go back to the problem. You can see what those numbers are. So over the years, income was 90, cash withdrawal was 75, liabilities 80, the share of that is 20, hot assets of 40, share of that is 10. Okay, so then we'll take and add 90,000 for income. That's his share over the years that he was a partner in the business. His share of liabilities was 20. Remember that increases basis. Your share of liabilities increases your basis. He took out cash of 75 over the years. Whoops, I did not give myself a new line for that. So we have to add 20,000 and subtract 75,000. Okay, that's cash distributed. And so let me sum that up. The new basis is 210. So the basis after adjustments is 210. Okay. And then also keep in mind that there was he had a share of 10,000 worth of hot assets. Okay. That's important too. So remember what Jana paid. So Jana's going to pay 225. So let's do Jana over here. So 225, and that's cash. So Jana pays cash at 225, and she assumes some liabilities. Okay, so basically her share is worth 245. Okay, so hopefully then what you can kind of recognize is she gets a basis of 245. His old basis was 210, so when the sale is made, when Sweeney sells to Jana, the basis of 210 and the new basis that Jana gets is 245. So obviously the difference, we can all do the mental math and go, it's 235, okay, or 35,000. And so 10,000 of that is ordinary income, the share of hot assets. Okay, so 10,000 is hot assets. That's ordinary income, HA. The difference is 25,000 capital gain, CG. Okay, so there's a gain of 35. 10,000 is ordinary income because of the hot assets. 25,000 is capital gain, basically the difference. Okay, take a look at question 20. Question 20 is about Yong. December 31, Yong sells his 10% interest in Catawissa LLC to Mai. I'm not sure how you say that. We'll just go with Mai for $117,500. Yong is a calendar year taxpayer. Catawissa owns no hot assets. Its tax year ends on September 30. On October 1, Yong's basis in the LLC was 11. His share of a current income is 4 for the period in which he owned the LLC interest, October 1 to December 31. How much capital gain does Yong recognize on the sale? This one's actually really straightforward for the most part. The selling price was $17,500. The basis was 11. However, he also received income of 4. Okay, so it's really pretty simple. Basis of 11. Income of 4. So the new basis is simply 15. And we compare the 15 against the sale price of 17,500. So the sales price was 17,500 minus the basis of 15, gain of 2,500. So capital gain of 2,500. And that has to be recognized, meaning we pay tax on that. Question 21 is right here. Lexington Partnership has a depreciable business asset, personal property, that it purchased for $60. It now has an adjusted basis of $36 and a market value of $70. The partnership has no other potential hot assets. Ambrose sells his 25% interest in the partnership. How much is Lexington's depreciation recapture potential? How much ordinary income does Ambrose recognize when he sells his partnership interest? So let's do question A first. And it's really pretty simple. We can just take a look at the original cost of 60, subtract the basis of 36, which means we've probably been depreciating it, and go 24,000 is the difference. So 60 minus 36 is 24,000. So that's the answer for letter A. That's the recapture potential. Okay. Then for question B, how much ordinary income does Ambrose recognize when he sells this? So what he has to do then is take the 24,000, that potential recapture, and multiply it by 0.25. So 24,000 recapture times 0.25, which is the ownership interest, which equals 6,000. So the answer to B is 6,000. So 24,000 and 6,000. Skipping 22, so we'll go down to 23. Burdine has a basis of 32,000 in her partnership interest and receives land with an adjusted basis to the partnership of 78. In termination of her interest, the partnership holds no hot assets. Under the proportionate liquidating distribution rules, what is Burdine's basis in the distributed land? Let's do that one first, and we'll come back and look at B. So basis of 32, partnership interest, and receives land with an adjusted basis of 78 in termination. So the proportionate liquidating distribution is just simply 32,000. Okay, so basically she has a substitute basis in the land of 32,000, which is her ownership interest. Okay, so the answer to A is just simply 32. For B, if an optional 754 adjustment to basis election is in effect, by what amount does the partnership adjust the basis of its remaining property? If that adjustment is allocated to depreciable property, to whom does the partnership allocate the resulting depreciation deductions? So the partnership steps up its basis in the remaining assets by 46,000. 78 minus 32 is 46. Or the amount by which the property's basis is decreased in Burdine's hands. 78 minus 32. Deductions related to the step-ups are allocated to all remaining partners. Okay, so it's $46,000 and allocated to all remaining partners. Question 24. A partnership in which a parent transfers 40% interest by gift to a child generated profit of $130,000. Capital is material income producing factor, and the parent performed services valued at $44,000. The child performed no services. How much income is allocated to the parent for services and for use of capital? Okay, so let's go over to Excel and do this one. So let's go over to here and let me just kind of get some blank space here for us. So let's go with the $44,000. Okay, that was income for services to the parent. Okay, and that was for services rendered. And then we have, remember the income was $130,000? That was this income of the partnership itself, income of the partnership. And then the parent owns 60% of that. Remember that, let's go 0.6. So 130 times 0.6, because the child was allocated or gifted the 40%. So that's $78,000. Okay. And actually, I'm sorry, I have to take the 130 minus, my bad. Take the 130 income minus the 44. Okay, that's how we do it. So my bad, I forgot that part. So then 51.6 plus the 44 is income for the parent, 95.6. Okay, so as parent, remember that there was a total of 130. So 130 minus what goes to the parent, that's what's left over, and that goes to the child. Okay, so the parent's income is 95.6, the child's income is 34.4. Okay, and then I want to do just one of the problems. So let's take a look at problem 25, and we'll wrap it up. For this one, Gil's outside basis in his interest on the Go partnership is $100,000. In a proportionate current distribution, the partnership distributes to him cash of $30,000, inventory with the fair market value of $40,000, basis to the partnership of $20,000, and land fair market value of $90,000, basis the partnership of $40,000. The partnership continues in existence. Does the partnership recognize any gain or loss as a result of the distribution? Explain. So this is a normal distribution, proportionate distribution. So the general rules are there is no gain or loss. Okay, so just a normal, general, continuing, proportional distribution. Letter B, does Gil recognize any gain or loss as a result of this distribution? Explain. And the answer would be no, because again, this is a proportionate current distribution. Gil would only recognize gain if the cash received exceeded his outside basis. He would only recognize loss under limited conditions and only if the interest in the partnership is terminated, which is not the case. Therefore, there is no recognized gain or loss. Letter C, calculate Gil's basis in the land, inventory, and his partnership interest immediately following the distribution. Okay, so his original basis is 100, and then remember what he receives: cash of 30, inventory with the basis of 20, and then land with the basis of 40. So it's pretty simple. Let's just go over to Excel. So let's go to the original basis. So 100,000, we'll just round it this time, so it's 100,000 basis, and we'll subtract from that cash, inventory, land. And so obviously he still has something left over, which is 10. So that was cash, inventory, land. Okay, so his new basis is now 10. So the answer is 10,000 for C. Okay, so that's it. Hopefully that all made sense. There's some really good examples in the chapter. Definitely make sure you take a look at those. I should point out there's some really good summaries in the chapter itself of some good concepts. So I'm going to point these out to you right now while I'm thinking about it. So on page 7 of chapter 11 is concept summary 11.1, which is a summary of the proportionate current distributions, okay, the general rules. So that's one big thing to think about and take a look at. That will really help you with your questions. And then on page 10 is the general rules called concept summary 11.2 of proportionate liquidating distributions when the partnership also liquidates. Okay, so that's about liquidating distributions. That's a good summary to take a look at. Page 10. And then page 16, which is concept summary 11.3, is liquidating distributions of cash when the partnership continues. So liquidating distributions, so one partner gets out, the partnership is still ongoing. So that's the difference between that one. And that's a good one to take a look at. That one's a little bit shorter. And then on page 21 is concept 11.4, which is now one partner selling his or her partnership interest to an outsider. So an existing partner sells to an outsider, the existing partner goes away, new partner comes in because of the sale. That's a good one to take a look at also. And I believe that, oh, there's one more. Adjusted basis. So basis adjustments under section 754, concept summary 11.5. That's on page 27. And that's probably that is the last one of those. So those summaries are really good. So when you get a question, and when you get the questions over in Cengage, they're kind of grouped. They kind of tell you what they're about. Those summaries are really good, kind of one-stop shops to go and take a look at to kind of help you think through what the general rules are. And that will kind of help you frame how to think through what the answers are. Okay, so I hope that helps. As always, if you have questions, just let me know.